Welcome to part one of the Concord Wealth Partners Financial Forecast for 2025. I'm Wade Lopez, CEO of Concord Wealth Partners. Sitting next to me is Gary Aiken, the Chief Investment Officer for Concord Asset Management. Gary, welcome.
Thanks, Wade. Great to be here.
Well, we've got a lot to cover over the next 10 minutes. We'll talk about inflation, political uncertainty, Bitcoin, and we're also going to look into Gary's crystal ball to see what he has for us for 2025. But before we start, I want to remind you that part two, we will take an even closer look at the stock market, the uncertainty and potential risk, and we'll also take a look at what we think we're going to like as far as portfolio allocations go. Gary, let's get started with inflation.
Thanks, Wade. Inflation is a really good place to start. At the end of 2024, we saw improvement in core CPI, which is on the screen now. Rolling average core CPI on a 6-month basis slowed from 4.6% down to 2.1%, and lower measures of inflation saw us around the 2% target for the Fed. But as we expand to longer measures, 9-month and annual year-over-year inflation, we see that inflation is around 3.3%, well above the Fed's 2% target. So inflation is proving to be sticky, like we've talked about. At the same time, unemployment data is showing some mixed signals. The unemployment rate has risen from 3.5% to 4.2%, but I like to focus on what's on the screen now, which is continuing jobless claims. And we can see that post-pandemic averages are still below the pre-pandemic average, meaning a strong labor force. We see upside risks in 2025, including lower taxes and regulation and focused net immigration. On the downside, we have to look out for how tariffs, deportations, and the Department of Governmental Efficiency, or DOGE, will impact the labor market.
Well, since you brought up tariffs and DOGE, which is all we hear media outlets talking about on a daily basis, why don't you break that down for us and tell us what that really means to us as far as economic impact and for jobs moving forward in 2025?
I like to look at where the next job is going to come from or disappear from. And the JOLT survey is a great place to start with that data. And what we can see here on the screen, I've classified the different segments of the economy into whether it's sort of the general economy, that is just things going the way they are, or the fiscal picture of states and federal governments and how their employees are going to be found in 2025. But if we look at those two areas that we were concerned about, tariffs and DOGE, we see that the durable goods and non-durable goods sectors are going to be impacted because of how exports and imports go. And then, of course, DOGE is not going to have a gigantic effect on the overall labor market, but they will have an impact in educational services and direct federal government employment. But I think the key takeaway from a chart like this is that even though we're really worried about those things, I just don't think that they're going to have a material impact on the economy in 2025.
Well, what about AI or artificial intelligence? How do you see that affecting employment moving forward?
I think AI is the area that will continue to impact the economy in very positive ways. This chart is one that we've shown to clients earlier this year, and it shows the ramp of investment, whether it's hardware or software spending, out to 2032 in AI. And you can see that we're just at the beginning of this. And the other exciting thing is that we're just at the beginning of showing promise from productivity. That is, people are going to become better at their jobs because of AI. Now, some jobs are going to be lost, like in any technological revolution. But new jobs that we didn't know we needed, those are going to be created. So we think that AI is going to bring productivity and probably new jobs to the market.
So you touched on economic policy here in the U.S. and the effects of AI, but with the new leadership transition, how do you see that affecting international and global markets for next year?
As we enter 2025, we see a world that's still in turmoil. What I'm hoping for is that maybe peace throughout the world can return with a new administration. But as we enter 2025, there's lots of danger. Europe is still embroiled in the Ukraine war. That's slowing growth across Europe. The Middle East still has a war between Israel and the proxies of Iran. with 100 hostages still there, 7 Americans. And of course, China is still saber-rattling in the South China Sea and about taking over Taiwan. While there's all this bad news, there is some good news too. Argentina is showing that capitalism can reduce inflation and increase prosperity for people who live under places where there is capitalism. And so we see a lot of political dysfunction all over the world, and you can see some of the leaders' names under their flags, where we think that there is the possibility in 2025 that things are so bad, maybe they can only get better. And at the same time, we think that stability and capitalism are going to propel countries that embrace it, like India, Italy, and Argentina, to higher ground in 2025. I think the really interesting thing is that, remember, all throughout last year, we were talking about how we were worried about the US election, and our clients were worried about the US election. And we said, don't worry about that. We don't think that that's a real issue to be concerned about. And certainly, the US election was resolved without much of an issue, and we had relative stability in the US compared to the rest of the world.
All right. So, sounds like the US dollar is a pretty good bet so far. And if we want to talk about the dollar, we got to talk about crypto. And let's talk about other commodities. What do you see on the, coming as far as what happened at the end of last year, moving into the first quarter and first half of this year?
So last year, we saw real strength in the US dollar. The US dollar appreciated against almost every currency around the world. And at the same time, there was an idea that Bitcoin was this proxy against a weakening dollar. We saw Bitcoin going up at the same time that the US dollar was going up. So Bitcoin isn't quite a currency. It's not quite a proxy against the US dollar. It's its own thing. And so we're going to treat it like a commodity, I think. But we're still thinking about that. As we take a look at that strong dollar effect, it did have the normal effect that we would expect on other commodities, like industrial metals like copper, aluminum, iron ore. Those all fell in 2024. And also agricultural commodities, wheat, corn, soybeans, they were all down in 2024. And it was weather that really had a material impact, with coffee up 80%. And if we're going to talk about commodities, we have to talk about the one we all consume on a daily basis, and that's oil. What we see is that there's a whole ocean of oil under our feet, and we have the technology to get at it. So supply is not an issue. The issue is demand. And what we see is that China and Europe are still slowing. The US just isn't as dependent upon oil as we used to be because we've become so efficient. And therefore, the consensus is for a lower oil price. And my question, I think, would be, if we expect oil prices to go lower in 2025, why would oil companies follow the Trump administration admonition to drill, baby, drill? All of that leads us to our 2025 outlook. And while we don't have a crystal ball, we do like to think about the future in probabilities. And so we think that there are 3 scenarios that investors should focus on in 2025. The first we're calling the grind. The second is a recession. And the third is stagflation. Wade, let's talk about the grind.
Let's stop right there, if you don't mind. Let's hold some people in suspense. Tomorrow, part 2 at 6 p.m. Eastern Standard Time. Let's let you pick up from right there. In part 2 of our forecast, Gary will give us his predictions for the year, the 2025 financial markets, 2025 winners, Bitcoin and AI, what to do, international markets, preparing for headline risk, and your asset allocation. Thanks for watching, and we'll see you tomorrow for part 2 of the Concord Wealth Partners financial forecast at 6 p.m. Eastern Standard Time.